In this video, I'm going to show you how I have a little fun with the options market, how I trade options for fun. I get a lot of questions from people. They ask me, Lee, what do you trade? Like, what option trades are you making personally for your account? So in this video, this short little video today, I'm going to show you how I have a little fun and how I make some more can't lose, absolutely guaranteed no lose trades, winning trades. I do these for fun. They're out there. They're not really that easy to find, but on very volatile stocks, they're out there. So I'm just going to show you a quick little rundown of some of the trades that I make doing this. Small contracts, small amounts of money, but doing over time with lots of different stocks that I can find, these option trades will actually add up. All right. So let me just kind of show you what I do for fun in the options market to make a little money. Now, what we normally do is that we look at stocks and we check the charts and we find the trends, but this is purely based on inefficiencies in the options market. So let me just quickly pull up a screen capture here of something that I do. I'll show you my actual broker statement that shows the actual trades that I've done. Now, what you see in front of you is just a very, very small smattering of these kinds of trades that I do. These are called, how should I say it? Once again, can't lose trades. But if you're familiar with how option trades work, specifically put option, I'm a huge put option seller. That's what I do. And I'll give you a little information on that in a minute. But if you know anything about options contracts, specifically put option contracts, the higher strike price should always cost more. The option premium should always cost more than a lower strike price, and specifically put options we're talking about. So a 50 strike put option should cost more than a 45 or a 40 put option. What I've been doing is, and what I've been finding is that I'm able to buy the higher strike put option for less money than what I can sell the lower strike put option for. So this way I'm actually buying the 50 put for cheaper than what I can sell the 45 or 40 put contract. That's just an example. So in this screen capture here, I just want to show you what I've been doing. Now, I took off the stock symbol because I don't want anyone to really know what I'm doing here, because this is a money maker for me and I'm not ready to give up the details yet. People ask me what I'm doing, so I want to tell you. And some people will say, people that sell newsletters or systems, they'll always get the question, well, if you're making so much money, why are you selling the system to other people? Why don't you just trade it and make all the money you can? Now, I get asked that too. And I do that. I make money myself. I make trades for myself. And I also have newsletters that we run. But in this case, I'm not telling you how I'm doing this. I'm just showing you what I'm doing. I'm not telling you the stock or anything. But what you see in front of you here, we'll go down the list here. And there is one trade in here, this Apple trade. This is a completely separate trade. And I'll talk about that in a second. But what you can see here, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 trades, okay? And it's a spread. So there's two actual trades in one, two actual strike trades in one. So here's what you can see. Now I'll go through it. Now you can see a buy to open and sell to open. So these are opening transactions that I'm doing. I'm buying one option and I'm selling the other. Now in this case, you can see the strike price right here. 38 strike price put and a 25 strike price put, both expiring in March 21st, 2025. That's the March Friday, the normal expiration. So you can see here, the 38 put in any stock, the higher strike put option should always cost more than the lower strike put option. So we're looking at a 38 put and a 25 strike put. I was able to buy the 38 put for 1 penny, okay? And I was able to sell the 25 strike for 4 cents. Okay, so here's the actual dollar amounts, the ending net result after my commissions of 41 cents per contract. This is what it is. I'm using one of my trading accounts. I have multiple trading accounts. So you can see here, I made $3.59 by selling the 25 put, and it cost me $1.41 to buy the 38 put. So net, I'm making $2.18 per trade here. It's only one contract, because what I've been finding is that this only works with one contract. So if I try to do 5, 10, or 20 contracts, I can't get it done. So I'm doing one contract at a time. Now, this is just something I do for fun. If I find these trades during the day, I will do it. But you can see here, so right here, so $2.18 I make. The next one, the 38 puts that I'm buying, and I'm selling the 28 puts. Once again, I'm buying the higher strike put for a penny, and I'm selling the lower strike put for 4 cents. Once again, $2.18, and I do it again here. This is the 28 put and the 42 put, buying and selling. $2.18, $2.18, $2.18. So 1, 2, 3, 4, 5. So that's over $10 right there. Now, I understand this is very little money. This is why I call it, this is what I do for fun. But what I'm doing is I'm doing these trades throughout the day over and over on multiple stocks. So this actually adds up. I've been finding myself making anywhere from $50 to $100 a day just by doing this. Guaranteed can't lose trades, and I'll show you why it's a guaranteed can't lose trade. So if I'm making maybe $75 a day, do that 5 times a week. What's that? $375 a week. Let me get my calculator here, and I'll tell you how much you could potentially make. So 75 times 5, that's 375 times 4 weeks in a month. That's $1,500 in a month you can make times 12 months. So we're talking about $18,000 extra dollars a year on a can't lose guaranteed win trade. Now, these are small amounts. So far, this is what I found, these small amount trades. And you can see the strike prices right here. But the actual stock price of this stock is well over $100. So I'm not going to tell you what the stock is, but the stock is over $100. And these are very, very, very far out of the money strike prices. Okay, if the stock's over 100, I'm trading the 25 puts, the 38 puts so deep out of the money. And these are the prices that I'm actually finding that they'll be trading for. So once again, people are asking me what I'm doing. I'm just showing you some of the trades that I do for fun and taking advantage of how these things are trading. So I'm making a little bit of money. I'm not breaking the bank, just pulling in some cash each day, making these trades. And over time, it actually adds up. So let's go to the chart here and just understand what we're looking at here. Let me pull up a chart here. So let's go to a stock that's trading over $100. So something like let's say AMD, for example. AMD is trading at $113, and we're trading contracts all the way down here. All right, so these really, really cheap out of the money contracts. Now, let's look at an option chain so you'll actually see how this is a can't lose trading opportunity. Just knowing that how the strike prices are priced out with put options. So here's what do I have pulled up? Here's Verizon. This is an option chain of Verizon. Put options on the right-hand side here. Verizon's around $41 per share. So let's just quickly look at the strike prices here, and you can see the higher strikes are always more expensive than the lower strikes. All right, you can see that right here. If you know anything about options, a higher strike put will always cost more than a lower strike put. But in the case of these trades that I'm making, if you can find these anomalies in the market and you can make money, or you can buy the higher price strike and sell the lower strike price for a higher amount, it is a win-win situation. Number one, you're doing this all for a credit. Okay, if you're buying the higher strike and selling the lower strike for more money, you're taking in a credit. That means no matter where the stock goes, you cannot lose on the trade. Now, the good thing is that if the stock actually fell down from over $100, where I'm telling you it is, down to the lower strike price, I can make a ton more money. So let's just go back to the screenshot here again real quick. So we have the 25 strike and the 38 strike. That's a $13 difference. That's a $13 difference. So let's just say the stock fell from 100 all the way down to 25. How much more money could I make? Well, the difference is, since I'm long the 38 put and short the 25 put, I can make $13 per contract. That's $1,300 that I would make on top of the $2.18 that I'm already made by doing this trade. So I'm either going to make $2.18 no matter what, or if the stock falls down anywhere in between the strikes, I can make even more money. Best case scenario is for the stock to drop down to 25. I'll make an extra $1,300. In this case, the 38 puts and 28 puts, if the stock fell down to 28, I'd make $1,000 because it's a $10 difference. Now this one was a good one. You got the 28 puts and the 42 puts. That's a $14 difference. So that's $1,400 I can make on the one contract. So let's just say this stock that I'm talking about did fall down to $25. I make $1,300 here. I would make $1,000 there. That's $2,300 overall. I make another $1,400 there. That's now we're in the $3,000 range. This one, the 42 and 29, that's another $1,300. So what I'm really hoping for is this stock that I'm trading just craps out really badly, which I know is not going to happen. But if it did, I can make so much more money than these little amounts right here. So overall, it's a win-win. It's guaranteed, no lose, can't lose type of trade. So there you go. A quick little video here of the trades that I'm doing for myself sometimes. You know, if I have time to follow these, I do run newsletters, so I have to put that at the forefront. But these are the trades that I'm making. I'm finding I can only do it in one contracts at a time. If I could do more, I would, obviously. But here's the thing. Can't lose. A little bit of money adds up, multiple stocks. But if the stock craps out, I can make a lot more money. All right, so that's that. I just wanted to show you that. Let's go to our website real quick, smartoptionseller.com. This is the real thing that we do. We have... We're big put sellers. I'm a huge put seller. Been doing that for over 30 years. It's all about put selling and selling put option credit spreads. If you want to know what we do, here's our services tab. Go to our website, smartoptionseller.com. Services tab. We have our 2 newsletters. We have our one-on-one coaching if you need some help getting to that next level. Here's our probability calculator, a favorite tool of a lot of people, probability calculator. Click on that. If you want to learn more about what put selling is, if you've never heard about put selling, get our free ebook right here. Click on the free ebook. I'll bring it up here. Put Selling Basics is a free ebook that I wrote about put selling. Scroll down, put your name and email address in here. We'll send you an email back with a link to the free ebook. If you want to learn even deeper, here's our video series on selling put options. It's a 5-part video series, about 5 hours. You get 30 days free to our put selling newsletter in addition to the videos, so have a look at that. What else can I tell you? We love put selling. Want to see our track record, our public track record? Click on the track record here. You can see all the trades we've done. And next on the screen here, I'm going to show you another video, another can't lose video. This one was actually on Tesla. It's based on a collar trade. If you don't know what a collar trade is, I go over it in the video. Another can't lose trade. So maybe take a look at that as well. If you have 100 shares of a certain stock in your account, you can possibly run this no lose kind of collar trade. All right, so take a look at that as well. All right, if this video has been helpful, please give me a thumbs up. Please give me a like, leave me a comment, send me an email. I'll always answer your emails. I make these free videos for the trading community. We all want to help each other out. All right, I'll see everyone in the next video. This is Lee Lowell signing off.